Have you checked your new Auckland CV recently and felt your heart drop a little? You are not alone. Many property owners across Auckland were shocked when the latest council valuation came in, some down by hundreds of thousands of dollars. And while CVs are technically just book value, seeing that number drop doesn't feel great. Lately, a lot of clients and friends have been asking me the same question. Should I object to my new CV? Let's break it down today. Hi, I'm Connie, mortgage advisor and founder of Prosperity Finance. From what I hear, there are usually two major concerns. You are thinking of selling your property, or you are worried it might affect your borrowing capacity later. Let's talk about selling first. Especially first home buyers often use CV as a rough reference for the property value. It's publicly available and usually show up in the property listing, so it does shape buyer perception. From a marketing standpoint, a higher CV can sometimes support a stronger selling price. But here's the truth, CV is not market value. It only gets updated every few years. And if you think about how much the market has changed over the last 12 to 24 months, you will see the problem. CVs are mainly for setting your rates, not estimating property price. The way they calculate it are pretty rough. The council doesn't visit your property. They don't know if you renovated your kitchen, added a new deck, or upgraded your bathroom. I personally have had a registered valuer inspect my home. They even check inside my wardrobe to assess the build quality. Council, they don't do that. So if you're planning to sell soon and your CV is clearly undervalued, especially if it could affect how buyers view your property, then yes, it might be worth objecting. Now, what about borrowing? Some people worry a lower CV could hurt their borrowing capacity. But in reality, most of the time, it doesn't matter. Banks rely on platforms like CoreLogic or Velocity to get the estimate value or EV of your property. These systems are updated regularly and far more accurate. If an EV is available, the bank will go with that. Simple as that. Only in a few cases like new builds, home income properties, large land with a smaller dwelling, or multiple units where EV doesn't exist, the bank might consider your CV. Even then, you can always order a registered valuation to avoid using the CV. Also, let's not forget, borrowing capacity is also heavily driven by your income. If your income can't support a higher loan, a higher CV won't magically change that. So to sum it up, if you are not selling and your property already has an EV, then honestly, it's probably not worth the time and stress to object. These objections can take 1 or 2 years to process. We all got better things to do, right? Not sure if your property has an EV? Reach out to our team anytime. We are more than happy to check that for you, free of charge. If you find this video useful, please like and subscribe. Until next time, take care. Bye-bye.